Hey guys, quick announcement here before you dive into today's show. We just locked up 3 individual assets that are all off-market, direct-to-owner deals that are going to help our partners and you, the podcast listeners, generate a ton of cash flow and build legacy wealth. And so I just wanted to take a moment to drop in here and invite you to a webinar that I'm going to be hosting on Tuesday, May 18th. And we're going to walk through each of these respective investment opportunities. One of the big reasons why we're doing this webinar is because we've had a ton of questions about parking lot investments here over the last couple of months. Now, as you know, we've been doing mobile home parks for nearly a decade now, and most everyone understands that business model. However, many of you probably know little to nothing about parking lot investments and the incredible opportunity within this niche. Now, one of the 3 deals that we're going to cover in this webinar is an institutional grade Class A parking facility located right here in my backyard of Clearwater Beach, Florida. Now, for those that aren't aware, Clearwater Beach has been ranked the #1 beach in America multiple times, and it's where I've called home for the last 2 decades. And so really no one knows this market better than I do. The Tampa Bay MSA is one of the fastest growing markets in the country and is on absolute fire. And so I'm super excited to share these opportunities with you guys. And so if you'd like to learn more, please go over to sunrisecapitalinvestors.com/webinar to get signed up, and I'll see you there.
You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buff here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is a real estate expert and senior managing director at Berkadia, Brent Sprenkle. Now, Berkadia is a leader in the commercial real estate industry, offering a robust suite of services to the multifamily and commercial property sector. Berkadia was formed in 2009 as a joint venture between Berkshire Hathaway and Leucadia National Corporation, both of which are renowned for their capital strength and sophisticated investment strategies. Now, Brent has more than 20 years of experience and expertise in commercial real estate at nationally recognized firms such as Berkadia and Sperry van Ness, where he has been involved in more than $1.2 billion worth of commercial real estate transactions. Now, in addition to his real estate activities, Brent is also a published author with the upcoming release of his book, Billion Dollar Portfolio. In this new book, Brent takes a deep dive into the certain personality type and key attributes that it takes to thrive in and build a substantial portfolio of commercial real estate. And so with that, guys, I'm excited to welcome Brent Sprenkle to the show. Brent, how are you doing today?
I'm great. Kevin, thanks for having me on. Really excited about this.
Yeah, no, absolutely. The funny thing, Brent, first and foremost, when we jumped on the video here, the Zoom call, I noticed that you're in a real office, which was really exciting to me to see that maybe we're starting to get back to some type of normalcy. And I know you're in California, and so probably not as fast there as some other parts of the country, but still, it's a good thing to see.
Yeah, well, I'm the only one here, and I came in just for this because they have really good internet here, right? So that's California is certainly not doing particularly great in the world of coronavirus these days. So we're going to be on lockdown for a while, I believe, unfortunately.
Well, just give everyone some context. We're recording this on January 26th. And so more than likely, hopefully California will be opened back up by the time this goes live, which would normally be 2 months out or so. But I did see something this morning that was fairly promising that your governor, basically stated that you guys are going to start working back towards I guess more the colored tier system of, threat levels, I guess you could say, and opening things back up. And so hopefully that means something positive. And by the time folks are listening to this, you are open back up and the world started to get back to normal. And most, that wanted the vaccine have gotten it. And again, things are getting back to a little bit more of a normalcy. But in any event, Brent, if we could, for those folks that aren't familiar with you, don't know your background, what have you, maybe take a few minutes and just tell us a little bit more about yourself, your background, and ultimately how you found yourself into the real estate world.
That's an interesting story. So back in 97, I was an engineer. I came from Pennsylvania and got brought out to California to work on satellites. I was working on DirecTV satellites, assembling them and testing them and designing some components for them. And that wasn't the most interesting job, despite how it sounds. It sounds fascinating, but it got really boring really fast. And it turned out I was not a very good engineer. So I wound up working myself out of a job and just said, I don't ever want to be an employee again. What can I do to basically control my own destiny and work as hard as I want and be successful? And a friend of mine had bought a few small foreclosed apartment buildings and just kind of mentioned that brokerage was an easy way to make some money and get yourself into a business where you could eventually invest and do well long term. So I took the plunge. And the great interesting thing about becoming a real estate broker is there's really like 3 requirements. 1, can you get a real estate license? 2, do you have a car and a computer? And 3, are you willing to work for free? And I said yes to all 3 of those questions. And 20 years later, here I am. So that's sort of the story with that.
And as far as which avenue you went down the real estate world, was it commercial or was it residential initially?
It was commercial. I jumped straight in with a company called Sperry Van Ness. They were originally out of Irvine. They had offices all out, just California at that time. Mm-hmm. And they brought me in and basically they said, what do you want to do? And I said, well, my friend recommended apartments. And they said, well, we have this one little area left, because back then, and I think a lot of brokerage companies still do this, they break up people by territory. So they gave me a very small area that didn't really have a lot of sales velocity and said, good luck. But I managed to somehow or another survive. And we're still banging out a living here.
What were some of the most challenging times there in those first couple of years? I mean, how long did it realistically take before you started seeing the fruits of your labor? I guess you could put it that way.
Well, this is a story I haven't told in probably 15 years. I had a girlfriend back in 97 or 98, and her parents gave me basically coupons to use to go to a movie, like at AMC or something like that. And that girl and I didn't work out, but I still had these movie tickets. I was flat broke. And I was like, what can I do? It's a Friday night. What can I do? I have no money. And I was like, I have these movie tickets. So went down, parked my car at the parking lot, went to the movie, came back out and drove out of the parking lot. And little did I know that it was first 2 hours free. And I was there for 2 hours and like 10 minutes. And I had a parking bill of like $2. So my credit cards were maxed out. So I parked my car and I was like, I'll just walk to the ATM, put my card in, said insufficient funds. And I was like, oh my God, I'm officially flat broke. I don't even have $1 left in the bank. So I came out and I just pleaded with the people. I have no money. I'm sorry. And they let me go and they gave me like an IOU or something like that. So that was about a year into the business. I guess that was 99. And I would just realize this is going to be tough. But I just said, what else am I going to do? I don't want to go back into engineering. I don't want to go back to Pennsylvania and live with my folks and try to figure out I'm going to make this work. So I just kept coming into the office, picking up the phone, calling people, doing whatever it took. And, after about 12 months in the business, I started to finally make some money. But the first 12 months were pretty horrible. And you got to really have thick skin if you want to come into this business. And the people that came in with money weren't as motivated. And they were more willing to quit. The people who came in with no money were more willing to work hard, but they just went through really stressful, hard times because they had no money in the bank. And, they had things like rent and mortgage or car payments and other things like that just piling up. So this isn't the easiest business to get in, but it's the only business where you can come in with no experience and a couple years later be making $1 million a year. Mm-hmm. So there's a lot of really good reasons to get in it.
Now, did you stay in the multifamily sector the entirety of your career? I mean, has that all you focused on the entire time from the point you started till today?
Correct. We've done other things. I mean, we've had clients that have given us office buildings and shopping centers, but what we've done is we've brought in a local expert in that space to handle it. In this business, to really be successful, you have to specialize in something. And I just specialize really in, private capital type transactions in Los Angeles, mom and pop type, $2, $3, $4 million apartment buildings. And, we do a decent amount of, $20, $30 million deals also. But I'd say the average deal that we're doing is probably about, $5 million Class B apartment building in LA County.
Got it. Now, you mentioned that, some of the key attributes, you kind of pointed them out as far as like who makes it and who doesn't make it. And, I think that's, it's an important note to, to state as far as, getting pushed into the corner, right? You got pushed into a corner. There's plenty of other folks that come into the space. Maybe they came from another career. They've got some money, got some savings. They planned a little bit more accordingly to get into the commercial real estate world. They know it's going to take 12, 18, 24 months before they saw their first paycheck, and they get comfortable, right? They don't necessarily, they're not fighting for their lives. They're not fighting to keep the roof over their head because they've got a pocket of money that they can dive into. And they might not ultimately be the most successful in the space. And those, such as yourself, found yourself in a corner, right? Absolutely broke, had to battle your way out of it. And so obviously that's one of the key attributes, like willing to fight, willing to put up your fists and fight basically to the death. What are some of the other big, I guess, either personality types or key indicators that you've seen over the years that really separate the successful from the unsuccessful in the brokerage world?
Well, one of the things that I originally implemented was just simply asking, what does it take to do this? What does it take to be successful? Remember, I had a degree in engineering, so I was used to formulas. And I just assumed that there's got to be some sort of formula to this. It can't all be about luck and personality. It's got to be some sort of a formula. And what they said was, if you're making, and this might sound horrible, but if you're making 500 calls a week, you're calling 500 owners a week, you're going to wind up setting up, 5 meetings a week. And maybe one of those meetings or 2 of those meetings will turn into someone saying, I'm thinking about selling my apartment building, please evaluate it. And then, of maybe 5 people you do an evaluation for, 2 people maybe will give you a listing. And if you get 2 listings, you'll probably sell 1 property. So I did this big formula and just said, okay, if I make 500 calls a week, I'm going to wind up with, maybe 2 listings a month. And if I get 2 listings a month, I'm going to get 12 deals sold a year. And, if each deal can bring in 30, 40 grand, I should be able to make $500,000. So that was the formula I had. And I just stuck with it. And every week they had what you'd call the pipeline meeting, which sounds kind of silly, but all the rookie brokers would go into the conference room Monday morning around 9:00. And there was a blackboard, and the office manager, the sales manager, kept track through some computer system of how many outgoing calls everybody made. So everybody had to get up and they had to write down how many calls they made, how many meetings they went on, how many proposals they did. And a proposal is, a broker opinion of value. It's basically to tell somebody what their building's worth and how you're going to market it if you get the listing. And then you'd say how many deals you put in escrow, how many offers you wrote, and just other things like that. So every week I was always like the number one person as far as calls, meetings, proposals, but I didn't really have anything to show for it. I didn't have any listings. I didn't have any deals in escrow. And after like 9 months, the office manager was like, you're doing all the right things. Maybe you just hang in there. And it just took like 12 months for it to start working. And it was really challenging. It wasn't exactly a fun environment. The other people that were in my office weren't exactly the most pleasant people. It was very competitive, and, rookie brokers are real catty and not exactly a fun environment. You didn't go home every evening like feeling great about things. I mean, you just got kicked in the crotch basically every day at work, hung up, ridiculed. You'd be on the phone and, the conversation wasn't going well, and you'd hang up, and the other people would kind of snicker because they could tell the kind of a phone conversation you had. So it was really brutal, but I knew what I wanted to do, and I knew that if I hung in there, I'd be able to pull it off. So to answer your question, because I don't know if I really did, you have to have a business plan. What you're going to do each week. You've got to be consistent. You've got to get regimented. You've got to build a habit. The people that are successful in this business, or really any business, are the people that develop good habits. They do the same thing over and over and over again. It takes a while to set these habits, but once you do, you will be successful. And, you don't always have to have the greatest personalities. A lot of these brokers that are amazingly successful are immigrants. They have accents. The most successful broker I've ever dealt with immigrated here from Iran. He's got a heavy accent, and he was, I think, the number one commercial broker in the entire country for like 10 years in a row. I mean, it's absolutely amazing. And he's not exactly a warm, fuzzy kind of a guy, but it's successful because he's just tenacious and he knows his business and he's a force. So it's going to take a while to establish that. But if you develop the right habits, You stay on the phone, you're going to wind up being successful. You can't fail if you work hard. You really can't. Eventually, you might run out of money from not closing deals, but you'll get there eventually.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche, and that's the phenomenal niche of mobile home park investing. Now, for those that don't know, I've been a full-time real estate investor for more than 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in Growth and Income Fund 3. When you invest in our fund, you get immediate diversification into multiple deals we acquired off-market that are already performing and have built-in sweat equity. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please visit us at investwithsunrise.com and request access to the investor presentation. It's absolutely free, and you'll get instant access to review the off-market deals that we've already purchased that you can co-own with our team. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-227-4359, and our investor relations team will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule the call, and let's jump on the phone. And with that, guys, I'd like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. So you got it was 97, 98 when you really, got off and running. And
well, 99 actually.
99. Okay. 99. And then, found your stride, started doing quite well. And then 2007, 2008 strikes us. What did that look like for your business? I mean, for your brokerage side of the business, I guess.
Well, that's a great question. And, to go back into memory banks, 2008 was a record year. I bought my first apartment building. I did some other investing and, other deals out of state, just kind of partnership things where I'd put a little bit of money here, a little bit of money there. 2007 was just absolutely amazing. 2008 hit, and I was just looking at my, the pipeline as in the number of properties I had for sale and the potential commissions. And I was like, geez, I'm going to make more money this year than I made last year. Well, I maybe had like 15 listings in January, February, March. Not a single one of those properties sold. And it was just because it was the top of the market and people just couldn't make the numbers work. But more importantly, when subprime crashed in the spring, people just were ducking for cover. And there was no liquidity. The banks were pulling out. It was ugly. 2008 went from I was supposed to make X to me making, 25 cents on the dollar, what I originally thought I was going to make. But that was nothing compared to 2009, where I think I made, literally speaking, 1/15th in 2009 that I made in 2007. Think about that. I had some friends that were school teachers that were like, "Why are you going in? You're making less money than us." Didn't feel good, but you just knew that this was going to be short lived. But the real challenge in 2009 and 10 was just trying to stay positive. It's kind of like today. You turn on the news, all you hear about is political jargon. Right now, we've got this impeachment going on. We've got the coronavirus going on. We've got all the people that are having other economic issues. It's just, if you turn the news on, it's very depressing. 2009, 10, 11, it was just as bad. So you had to just not turn the news on, because if you listened to it, you'd wind up getting yourself into a funk. You'd show up to the office having been stuck in traffic for 30 minutes listening to this garbage on the news, and you'd get there and you just wouldn't want to work because you're like, what's the point? The people that are always successful are the people that, feast or famine, good times, bad times, they're always trying. They're always trying to do whatever their business plan is. And so many people that were not really even smart or well capitalized made incredible investments in 2010, 11, and 12 because they just realized, hey, this is the bottom of the market. It's not going to get worse what it is now, and I can make this work. Mm-hmm. And the brokers that didn't get out of the business in 2010, when the dust settled, they didn't really have a lot of competition. A lot of their competitors left and they went into different businesses, and they came out of it really with no competition, and they got a lot of business that way.
Mm-hmm. So I'm going to pivot to the other side of things now. You mentioned 2007 was literally one of your best years ever. In addition to that, you bought your first apartment building. So it sounds like at that point, you kind of stepped over and shared dual roles from the investment side, general partnership side, and also still being a top sales broker. And so, your new book, $1 Billion Portfolio, let's speak to the investor side of things. And again, we talked about some of the key attributes of a highly successful commercial broker. What is it that you've seen on the other side of things, the other side of the equation, as far as the investors, like your clients, those clients that just really stuck out, that stick out in your memory, as far as like, man, they've got it together. They've done such an incredible job building a successful business. Like, what separates that top-notch investor or investment firm from those that barely scratch together and can, buy a deal or two over their, investment time frame?
It's the people that have a really well-honed business plan. It's people that can look at a property within 5 minutes, know whether it's something they want to explore or not. Because every day you're getting inundated as an investor, even as a broker, with hundreds of properties that show up in your inbox. And they all look the same. They're overpriced. In any given market, every deal seems overpriced. The cap rate's lousy compared to where you want it to be. There's deferred maintenance. The rents might not really have any upside. So how is it that you can sift through these deals quickly? So the really successful buyers, investors that we've dealt with, they have models and they have kind of like a checklist: unit mix, parking, location, where the rents are in comparison with market, what the going in cap rate is. And if it fits most of these criteria, then they'll explore it further, to the point they'll maybe want to go out and drive it, underwrite it, call the broker. So the really successful buyers, investors, can look at a deal very quickly and size up whether or not they want to explore it or not. So they're very focused, and they can quickly go through 100 deals and find 2 or 3 that are worth exploring. And if you underwrite 2 or 3 deals a day and wind up writing 1 offer a day, that's 5 offers a week, you're going to wind up landing way more deals than you know what to do with. And at the end of the day, you're going to lose all your money by the down payments. You're going to go broke without no money, but then you've bought all these incredible deals, and other people are going to see what you did, and then you're going to be able to go out and get investors for these properties. So at some point, you will spend all your own liquidity, but if you're buying amazing properties and other people find out that you have ability to source deals and manage them and turn them over and improve them, you're going to wind up with more investors than you know what to do with. And that's almost always how these guys go from owning 1 or 2 or 3 deals to owning a couple hundred. That's just a formula we've seen. In this book I wrote, $1 Billion Portfolio, I talk about this over and over and over again. It's the people that have, I wouldn't even call it a strategic vision. They have a checklist and a criteria for what they want to buy, and they keep buying. In any market, they're writing offers. they're touring properties, they're talking to brokers, they're returning and sending emails. They're out there hustling. And when the brokers see them, they know, hey, this guy or gal is serious. I'm going to take them seriously. If they want to write an offer, I'm going to take it seriously. And that is how those people have built up these massive portfolios.
How does that new investor, really garner the attention of someone like yourself? That again, you've got return clients that are going to close a deal, right? You don't get paid unless a deal closes. In addition to that, it's your reputation with your seller, right? Like you want to bring the right buyer to the table. And so, what advice do you give a newer investor that's really trying to get their foot in the door? And, in addition to just making offers, but what are some of the other suggestions you might have for them to help stick out amongst all the rest?
We do get occasionally, not occasionally, I'd say once a week, I get a call from somebody who's kind of new to the business. And you can very quickly tell during the phone call that they really have no idea what they want to do. And when somebody doesn't know what they want to do, it's challenging to take care of them. Yeah. It's like when you walk into a restaurant, they give you the menu. And the waiter comes, what can I get you? And you go, I don't know. The waiter's going to look at you like, what do you mean you don't know? You have the menu. Do you need more time? So when someone calls me and they say, I'm looking for deals. Okay. How many units? What kind of location? Oh, just anything. What do you have as a good deal? Like, well, one man's trash. Tough. Yeah, one man's trash is another man's treasure. Well, what do you have as a good deal? What would you buy? I'm like, I always laugh about that. What would you buy? I'm like, do you walk into a car dealership and ask the guy at the car dealership what he would buy? I mean, people only need one car. I'm a broker. I'm not supposed to be buying every deal, right? So the people that can't tell you what they want are the people that's hard to take seriously. The person that calls and says, I'm looking for 20 to 30 units, the west part of town, built between 1970 and 1985. It needs to be ones and twos, decent parking. I'm okay paying a 4.5 cap. I prefer paying closer to a 5 cap. Need a little bit of upside. Clean deal. What do you have? It's like, wow, okay, I can really narrow quickly what I have. And more importantly, and this is, I can't even state how important this is, Kevin, that person's going to get a return phone call because a month down the road, something's going to hit my desk and I'm going to be like, oh, wait, Bob called me a month ago. This is exactly what he was looking for. And then I'm going to call that guy or gal back and say, hey, this should fit your criteria. And when someone calls and says, I'm looking for a good deal, I don't know what to do with that because what is a good deal? I mean, like, right. There's no such thing as a good deal. People are like, find something that's underpriced. I'm like, well, I mean, that's not my job. Like, no one says, hey, Brent, my building's worth $3 million, but could you put it on the market for 2.7 because I just feel like losing money? I mean, it's just like no one's going to do that. So I just tell people anything you buy in a good location, you have to have like a developer's mindset to the property for investing. And what I mean by that is it's in this competitive market where commercial real estate is so highly valued, not dissimilar to the stock market. You have to come in like a developer thinking, how are you going to improve the asset? Mm-hmm. What are you going to do to take it from a 4 cap to a 5.5 cap? How are you going to add value? Are you going to raise rents? How much can you raise rents? Are you going to have to renovate units, take care of the exterior? What else do you need to do? Because if you can effectively increase the NOI, everyone knows this, you can then go back and refinance the property, pull a good bit, if not all, your down payment out, and move on to the next deal. That's the beauty of real estate. A client of mine calls that the dream of real estate, where you buy a property, and I write about this in the book. You buy a property, a couple years later, you refinance it, you pull all your money out. Meanwhile, you still own the building, there's cash flow, and you're getting all the tax benefits. And a couple years later, you do the same thing all over again. You refinance the property, you pull more money out, you keep the property, cash flow it, and buy another deal. I mean, this is how people get incredibly wealthy long-term buying commercial real estate. Of course, it helps to be in an area where there's a lot of appreciation, where rents are growing, and the coastal communities, Florida, California, have seen tremendous rent growth. But if you're in the Midwest where rents don't grow as much, you just have to buy right. You can't buy a 4 cap hoping to get to a 6 cap. You got to buy a 6 cap. At least you're getting amazing cash flow there, and you can get a high leverage loan to begin with and probably bring some California investors in looking for actual yield, which is something that we don't have out here.
Yeah, you guys, you don't know that word, right?
No, what's cash flow, right? I mean, cash flow. The joke with cash flow in California is when you refinance the property, that's cash flow.
That's funny.
So people are like, I get cash flow because I own 10 buildings, and every year I'm refinancing one of them. Like, well, is that really cash flow, or you're just getting your principal reduction out? But I mean, everyone's got a way to make money, and every market's going to have a different business plan, and you got to develop a business plan and stick with it through good times and bad times. And I think everyone's been hoping that there'd be some amazing deals to come out of 2020. We're not seeing it.
It's only got more pricey. Prices have gone up. Maybe not in California. Maybe I'm sure certain markets. Well, I shouldn't say California, but because it's really much more market specific than that. I'm sure certain areas that have seen a not a mass exodus, but a population decrease, or folks left a particular area due to coronavirus. Short-term impacts. I'm sure San Francisco's down slightly. I'm sure New York City's down slightly, and I'm not sure about Los Angeles, but you could speak more to that. Have you seen any direct impacts, market specific, as far as pricing on, call it multifamily assets?
Well, you got to remember something, and this is something that you're not seeing there, but we are out here. Rents have gotten crushed in California, especially in Los Angeles and San Francisco. We're talking Class A buildings, rents are down, 15, 20%, at least 10. Class B, they're down 10%. Class C, they're kind of holding steady because the workforce housing, people have to live somewhere, right? But rents are down big time. So if you take, 5% off your NOI, and then you also have this thing that we typically don't have in California called vacancy. And then you also have this thing that we never have in California called collection issues, because people don't have to pay rent. There's this national rent moratorium, California rent moratorium. We've got tenants in buildings that we're trying to sell that haven't paid rent since March of last year. And they have jobs, and the owner can't do anything. It's insane. So the prices have stayed the same. A $5 million building is still a 4 cap. But the reality is it's not even a 4 cap, because if you take the vacancies and you plug in the real market rent, maybe it's a 3.8 cap.
Yeah.
And then it's no longer a 3% vacancy factor. It's probably 5 to 10. And you do have collection losses. People aren't paying rent, and that could be 5, 10%. So the deals on paper might be a 4 cap, but when you really look at the actual operations, they're closer to a 3.5 cap. And those deals just don't sell, because not only is it just unattractive, but you can't finance the thing. The lenders aren't stupid, and they're looking at these same things and saying, hey, this deal is not solvent right now. This economic operational deficiencies right now. So it's challenging to find deals that work. You get deals in escrow, and then the buyer just comes back and says, I can't make this work. I was in escrow to buy a small apartment building in November. There was a few vacancies in the building. I was getting a bridge loan. My property manager, when I first went under contract on it, was very comfortable. We'd hit $2,500 on the rents, which sounds really high for a 2-bedroom, but is pretty standard for this part of Los Angeles. Well, when my contingency period was up, I just called him and said, Steve, are you still comfortable with $2,500? And he's like, no, those are probably $2,000 now. I put $2,000 in my model. That deal went from a 4.25 cap down to a 3.7 cap. I called the broker and said, I'm out. He was furious, but I just don't think he understood that the deal just didn't make sense anymore. And he and his seller were just so furious. And I just said, look, it's not me, it's the market. And why don't you go ahead and lease the units out, and then we can talk. If you can't lease the units out, then good luck selling to somebody else. So people just don't want to really understand what reality is. So back to your question, have prices dropped here? They have, in a sense, that the deals that are selling only if they have good operations. And they're selling at a decent cap rate. You see deals that sold for a 3 cap a year ago, and it was just based on the hope and aspirations that somebody could move the needle on the operations and make it a 5 cap or refi it. No one's buying that story anymore, because they know where rents are and they know how difficult it is. So people want to buy a deal based on the current numbers. They hope the rents come back. They hope the operations come back. They hope that long-term there's some rent growth. But there's no one really right now making foolish decisions about investing with commercial real estate, at least in Los Angeles. Maybe there's some, class A brand new gorgeous apartment deal that someone just says, I want to buy it as just a trophy deal. But we're not seeing people make reaches like what we saw a couple years ago.
So in generally speaking, transaction volume is down across the board. Because
for Berkadia as a corporation, we were down only about 20%. But remember, Berkadia is national. So while California might be off 50%, all those California buyers they're taking their money and they're going somewhere else. You know that. You're seeing California buyers flying in, into your airport, driving out and writing offers on the deals that you want to buy and overpaying. So they're going somewhere else. So our offices in Florida and in Texas and Alabama, they're doing great. Their numbers are fantastic. And Berkadia also does a ton of loans. That's our primary business. Mm-hmm. Refinance market's been booming, as everybody knows.
Yeah.
So Berkadia is doing great. Reality, my business was off about 50% last year. I hope that things come back to normal this year, but we have to be realistic that we're still in a bit of an economic mess out here. We have tenants that aren't paying rent. And do you really want to buy a property not feeling comfortable that tenants are going to pay rent? It could go till next January till tenants have to pay rent again.
Well, it's not even that they're not paying rent. That's uncomfortable enough. But the fact that you can't get them out of the unit, that's the challenging part. And I understand. Personally, our company, up until the end of December, we own a number of assets in New York, and gorgeous assets, really high quality manufactured housing communities. And ultimately decided to exit out of that market. Found a ideal buyer that owned a lot in that marketplace, and so even with the delinquencies, could make sense of it. But folks that were in 4+ star communities that still had their jobs, still had the ability to pay, just selectively choosing not to pay. It's a very different mindset, and that's a tough pill to swallow. That's a tough one, and unfortunately, it's just there's nothing you can do as a landlord. It's unfortunate.
We also have this kind of dilemma here where anytime you're in a transitioning market, you get a kind of a differential between what buyers' expectations are and sellers. Sellers are looking in the rearview mirror and saying, last year people made an offer on my property at 4 cap. I expect a 4 cap. And the buyers are saying, well, rents are going down and people aren't paying rent, so I want a deal to 5 cap. And then the seller's like, well, yeah, but interest rates dropped and, my building's full and everyone's paying rent. And buyer's like, but look what else is going on in the world. There's no jobs. The economy's a mess. We're on lockdown. There's a big difference between what people's expectations are. So you get this for typically 12 months. And then the sellers are also thinking, we're going to come out of this fairly soon. This is only going to be another 6 months. And in 2009, 10, 11, the sellers weren't thinking this was going to be short-lived. Now they all are. They're thinking they're going to open up the economy. People are going back to work. The vaccine is out. So they're like, I'll just hold my price. I'm not going to discount it. I'll get my price eventually. So there's no bargains out there. There's no desperate sellers. Now an office and retail and hotels, well, that's going to be a whole different thing. Hospitality is, for the most part, not doing well. I understand that, these small hotels are kind of infill within cities are doing okay, but the tourist hotels, the business hotels, they're not doing well. I don't know if that comes back anytime soon. Retail, that's also a train wreck. And I don't know where office goes as well, because so many people have figured out that they like working out of their houses. Yeah. Why would they want to go back to the office? So there's going to be some opportunities. It might not be in places like mobile home parks and apartment buildings as far as the bargains. But if bargains pop up in other spaces and other asset types, then the flow of capital is going to go towards those. Mm-hmm. And then that could just create some more opportunities for housing as far as finding some deals that are either priced a little bit better or there's some other opportunities.
Yeah, no, I agreed. And I want to be respectful of your time as well. I'll make sure that we get through this. I want to cover I guess you could say the last topic of the interview here. And that's your investment side. Okay. So we talked a lot about the brokerage side, but talk to me about stepping in, 1 foot into the other arena on the investment side of things. And what does that look like to juggle both? And I don't know how active you are on the investment side, in comparison to your brokerage side, but maybe speak to that a little bit. And I think that's one of the huge benefits of getting into the brokerage business and, getting in and understanding that side of the industry prior to entering into your investment endeavors. And so I'm sure there's pros and cons either way, but maybe speak to what that looks like for you.
Well, most brokers, for whatever reason, typically don't ever invest in commercial real estate. Sometimes
which blows my mind,
yes,
by the way.
Sometimes they'll just drop a little bit of money with an investment with a client on some deal they're buying, but they typically don't want to buy their own deals, and they have their reasons. Oh, it's too much work. Yeah, I don't want my clients to think I'm in competition with them. They've got their little excuses about why they don't. But the reality is, brokerage, there's no 401k paid by a brokerage company. There's no retirement plan. Berkadia is not going to give me a pension when I turn 65. It's not going to happen. So I just thought, if I want to control my own destiny and be able to have a good retirement, how am I going to wind up getting any kind of cash flow when I'm older? Or even now. Not to mention that brokerage is a grind. It's really what I call a young man's game. It's not easy to do it long term. This has been 20 years I've been doing it, and it certainly takes its toll on me at times. So I thought, I needed to buy some buildings and I need to have some passive income. But obviously it is management intensive, but there's an easy solution to that. It's called third-party property management. So if you're willing to let someone else do the work for you, which everyone should, then it's not like it's that difficult. It's, most people use a stockbroker to handle their stock accounts. I use property management to handle the apartment buildings I buy. It's the same philosophy. That 5% I'm paying, that frees up a lot of time that I can spend talking to you and talking to clients and putting deals together. So that's, the enjoyable part of the business. But it's a juggling act, of course. And I try to spend, the majority of my time is spent on trying to find other deals to buy. So every day I try to spend maybe an hour just looking on the internet to see what's out there, maybe making a couple phone calls to brokers. I wrote a couple offers last week on some buildings in San Diego, so I'm following up on those. You have to spend more time really working on building the business. Operating the business, you can delegate that. And a big piece of the book that I wrote is about delegating. And the only way to really grow your business, to scale your business, is to be able to offload the work that you really don't want to do, which is typically property management, leasing, renovating units, things like that. That's why you have other people. Why you don't do, if you have a $500 an hour job, you don't spend your time doing something that's worth $20 an hour.
Right.
So, but I try to buy, one deal a year. That's kind of been my philosophy. Buy one deal a year. But now I'm kind of thinking maybe I should try to buy 2 or 3 so I can get to the quote unquote promised land earlier than I'd like.
What is the promised land?
Oh, the promised land is this fictional place where you wake up in the morning and go, I'm not going to do anything today. I'm just going to go relax, do nothing, and millions of dollars are going to magically show up in my bank account. But we all know that you never get to that level because you always want more. And that's just human nature. I write about this in this book again, is that the people who are successful are the people that just enjoy it. They don't want to retire. This is what they do. This is their enjoyment. They go out and they hunt for deals. They write offers. They're in pursuit of buying more properties. It's like Monopoly. They just enjoy it. This is their game. It's their passion. If you don't have passion for building a portfolio and buying commercial real estate, you're not going to be successful with it. So I just tell people that the people that have become really successful are the people that just enjoy buying buildings, despite the fact that tenants are challenging, that there's attorneys that are suing people for things like there was a roof leak or something, and tenants claim that their lives have been ruined by the horrible landlord. You just have to get through that and just really enjoy the business.
Yeah, no, I love every bit of that. And, Brent, this has been a great conversation. Lots of powerful things that you've shared here with us today. And for those that want to learn more about you, what you got going on, get in line for that book that you've got coming out here shortly. Where's the best place to find you and really, stay connected to what you're doing?
Well, the book's on Amazon. It actually got released this week. Yeah, okay. It's called $1 Billion Portfolio. You can find that. Just
congrats on the release, by the way. That's awesome.
Well, thank you, Kevin. To reach me, easy. My phone is 310-621-8221, or you could email me. It's real simple. It's my last name, Sprenkle, followed by apartments with an S at the end, at gmail.com. So sprenkleapartments@gmail.com. So three ways you can get in touch with me right there.
Alrighty, awesome. Well, Brent, thanks for coming again, man. It's been a lot of fun having you.
Thank you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Buff, wishing you huge success. Take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.